All right, welcome back to the channel. This is Collin McKee, host of EndeavorsAI, an AI automation agency focused on the venture capital and private equity space. Today with me, I've got Craig Taggart, venture partner of Quibits Ventures. It is a quantum computing focused firm that's AI heavy, and so right up our alley in our discussions. Craig, thanks for joining. You had mentioned that very interesting tidbit about Quibits being the first quantum-focused venture fund. And I was just kind of curious, what brought you guys to that? I mean, it sounds like a gamble, but probably a very well-placed gamble. But what brought you to that focus, and how's that been for you guys?
Sure. Thank you for the question, and appreciate being on the show. So I basically joined Quibits Ventures as a venture partner about a year ago. I come from a venture background, working with a family office and working with deep tech companies around AI, and I just saw a shift coming in the market, and I was fortunate within my pretty good business network here in Southern California to be connected to and started talking to the general partner of Quibits Ventures, and he started the fund, the first fund, 3 years ago, actually 3.5 years ago now, and it was really the first quantum technologies-based venture capital fund in the United States. Since then, there's been more venture capital funds in the world. I don't know the number on that as we speak today on December 19th, but we definitely are trying to lead the way as far as the evolution of this technology. And we just, again, we think we're at a critical inflection point for the future of computing, for the future of intelligence, AI, and the infrastructure as we know it. And that's kind of our theme around our firm. So.
Okay. So that definitely shapes your focus as far as founders and companies. Would you say that everything surrounds quantum computing? So your focus as far as investments. Yeah, I think you mentioned infrastructure when we last spoke. There's a couple of different levels to it. Can you kind of walk us through what the portfolio looks like and the different players there?
Yeah, no problem. So we just did our first rolling close on Fund Two. What that basically means, we have a Fund One. We have about 13 companies in Fund One, and those are all around. Those are all at the seed or post seed or Series A financing round, and those are based around the investing at the convergence of kind of what I talked about just previously. Is that's the humanity of the fabric of compute. So we're really talking about really four areas that we focus on. Um, first one is data center innovations, and that's really the energy efficient, hardware native architectures that really drive drive the next leap in really digital infrastructure. And obviously that's in a lot of the financial news, some of the major firms around data centers and edge compute and just the need for power, which is very much lacking right now. So I've been asked to speak at a couple panels this year at USC and family office here in Southern California. And I always come back to this 98-2 ratio where there's, a 98% demand for these data centers. Doesn't matter where they are, whether they're small, medium, or large, and a 2% supply. So there's not enough power to generate the future of compute right now. So basically what that means in layman's terms, I guess, is basically whenever one of these is built, for the most part, servers and racks are going in the next day, and they're usually filled up and that's across the board.
Right.
So that kind of speaks for itself. And then you have what's on everybody's mind, which is next gen AI application layer, and that's really the domain specific intelligence, real time decision systems, and that operate beyond typical limits that we know. And that's what's really on everybody's mind. That's what everybody think is driving this growth and this word of mouth and everything around it. So the next one, third one is next gen compute, and that really gets into the photonics, um, neurophobic, cryogenic compute, really, really, really deep tech stuff. And we're scouting, we're searching, we're procuring deals in that space. And then finally, probably the most important one is quantum technologies, and that gets into the real foundational algorithms, and with error correction, which is on everybody's mind, hardware, and then the entanglable based systems. So, you know, that's kind of where we are as far as our investing theme. And a lot of that, we have probably 3 companies we've invested in for Fund 2. And I think we've warehoused probably 8 of those so far, but a lot of those are around photonics and the future of quantum. So,
Awesome.
and I'm very blessed, I will say, with my GP, Nardo Manalotto. Is a very, very strong background in venture. He came out of Kaiser, and he's a phenomenal manager of companies. And I'm helping him, doing a lot of things with the fund right now.
Excellent. Yeah, you guys are in a great spot.
We hope
so
so.
operationally, well,
So.
if I was a betting man, I'd be betting on you. Yeah, for sure.
You.
So from an operational standpoint, when it comes to deal flow and diligence, portfolio support, has there been much recently that Quibits has employed as far as AI tools, sorry, to assist with that process?
Well, I'm very much using a lot of AI tools right now, just for my business. I think the AI based companies that we're seeing is really at certain layers of compute, and it's really around there's the application layer. There's areas of AI that we like to focus on, but it's really kind of broken down to where you have this application layer that everybody talks about, right? So that's an area that's the chat GPTs, that's kind of those models, and I use those on a day-to-day basis now, honestly, because I just think it's the most powerful thing to come across. Then you have companies that we look at the deployment layer, and that's really kind of the machine learning ops, which is probably more relevant to your question, and the tools. So this is kind of the middle layer developers. So we haven't really looked at that so much, but we're really looking at kind of the model layer, which is the next one, and that goes into the algorithms or the LLMs, and that's really the brain, right? So that's includes the foundation models, language, image, logic. So that's getting into the Claude 3.5, the Gemini, which I use those a little bit more than others. My wife's been at Google for years. I'm kind of the Gemini guy. And then the data layer, we do look at companies on the data layer, and that's really storage pipeline. So then you're getting into kind of the picks and shovels of AI, and that's AI that's fueled by data at this level. And this layer handles kind of the collecting, cleaning, and organizing of data, right? So, and that's the snowflakes of the world that you might know of, or vector databases. That's where they operate. And then finally, at the infrastructure layer, the chips, hardware, compute, the physical foundation is where we're very interested. And that's companies that you would know, such as NVIDIA, GPUs, which are really powering everything, AWS, Google Cloud, and then Amazon. So those are those are areas that we look at, and there's about 5 of them that I outline. So,
Any challenges for adoption when it comes to these new tools? Have you found anything that's like it's probably not worth it right now? It seemed like a shiny new toy that would be of value, but really wasn't a fit. Any I guess unsuccess stories in AI adoption in your experience recently?
yeah. As far as quantum, or as far as qubits is concerned, we have no shortage of deal flow. So that's a good part. That's a good news. So I do a lot of that on my own, and then Nardo is obviously managing that process as well. But we haven't had any issues so far because we're basically looking at it from an investment standpoint. We want to be positioned to be able to understand these technologies at the AI level, which honestly I think AI is fueling quantum, and quantum is fueling AI. I'll kind of mention something real quick that maybe is relevant for your show. But one of the questions I was asked is, how do you? And this was at USC, so again, it was a lot of academics, and it was good. It was really good. I was on the panel with Google and Amazon, so I had to know my stuff pretty well. So anyway, but it came up where I put it in these terms that people kind of resonate. They're shaking their head. But I said, if you can use an analogy, which I think people learn about kind of where we are, is that Sundar Pichai, who CEO of Google, obviously I follow him, but he came out recently, and there's a lot of posts for me on LinkedIn that I put out there. He recently came out and said that quantum computing is where AI was 5 years ago. So it's a pretty profound statement, but for somebody in his position and the R&D that Google has spent on Willow, on their quantum chip, he's been right almost every time with that company, which is why it's one of the best companies in the world. So, and then I just use this kind of terminology. We think AI is, and this is not a bad thing or a good thing, it's just how it is, right? So AI is a fast sprint with many participants. So think about a race, right? And high short-term volatility. So you have a lot of players, a lot of companies coming to the space, mainly at the application layer that we're seeing. And so there's some short-term volatility, as I said. Quantum, if you think about it, is more strategic marathon with far fewer highly capable runners. But we feel by investing in our fund now, and this is kind of how we look at investments, you're really, an LP is really securing a position in the next kind of fundamental, call it platform shift, that we believe will be a consensus driven investment, in the next decade or 5 years, however you want to term it. But it's happening now. It's happening faster than people realize. So we just think people's portfolio needs to weather the inevitable shakeout in the AI model, because it's going to happen. It's just how things work. I mean, I'm old enough. I just turned 50, so I'm old enough to know how the .com thing went, and how a lot of companies came out and tried to build a business around stuff and technologies, and we know how that worked out. So it's just how we're positioned. That's kind of what I wanted to just mention. So
yeah, with the multiple layers of businesses that support each other, I think that's a very, very prudent way of going about,
absolutely.
the eventuality. See, that's, yeah, it's very smart, very smart. Well, excellent. I know you had mentioned you've been rather vocal as far as the restraints and traditional consulting models, and how you're finding a way to employ AI to make that a better world. So I'd love to get a little bit more color into that project that you're working on, and see how that's been going for you.
Yeah, great question. I appreciate the transition there. I've been fortunate enough to understand, the technology shift that we're in right now, and I recently posted because I follow consulting quite closely. Still early here in California. So I follow it quite closely, and I've been noticing some disruption in the industry. And I did, again, I'm on LinkedIn. I post a lot of content. So if your viewers or listeners want to check me out, that'd be great. But I posted an article about McKinsey losing, Fortune 500 clients last quarter, and that's happening across the board. So why is that happening? Well, it's because of AI's here. And, McKinsey's been, and these big four consulting firms have been doing what they've been doing for years. I've never been a big fan as far as the real value that they bring, but I don't want to offend anybody on this channel. But the big four model, the bottom line, is breaking and it's broken. And it was built on really kind of armies of junior analysts and huge 800-page decks, which it is what it is. And then these 6-month engagements and these $2 million price tags. And, what's happening now is, what I'm doing is I'm building growing actually pretty quickly, a hybrid consulting model. And that's really around an AI powered profit acceleration software tool that I use. And why is that important? Well, it goes along the lines of kind of what I posted on my post, and the fact that, a 3-person or myself or people that I hire with the right AI stack, what I have, can now analyze 10 years of data in 48 hours, literally. And not just 6 weeks or 12 weeks or 3 months or however these consulting firms told the client it took. And they can, guys like me can generate a strategy framework in real time and really deliver insights for $200,000, $300,000, 10% of what it used to cost, which is around $2 million for an average engagement. So, those are some of the things that I've seen. And, there's a new consulting stack, which is where I'm kind of building my business around. And that's really where AI handles basically all the data and analysis. So 90%, maybe at 100% of what junior analysts did. Humans really handle the influence and change management, what partners did. So there's a new model in town, if you want to put it that way. And, so I wrote a deep dive on, the 8 capabilities that survive AI disruption on consulting. And it was kind of a last, it was kind of a call to action on my post. And within a week, I was over 1.1 million impressions on LinkedIn. And it just went absolutely viral all over the world. So I've been spending a lot of my time, because I asked them, just drop consulting in your message or whatever. So they did. So I've had to go through and respond to all those by myself, which is a good problem to have. And a lot of those are turning into phone calls and conversations, and really, making people aware and engaging them, and then getting them to subscribe to what I'm saying. And it actually makes a lot of sense. And then they're actually converting into business clients. So, but that's kind of where I'm at. I can talk all day about it, but I want to be respectful of your time.
Not at all. And maybe we can leave some links to your articles and your LinkedIn page.
Yeah, sure.
With this as well.
That'd be great.
So in your experience, is there a particular niche of clients that this new consulting model works best for, or particular problems that it's best suited for? Are you going targeted approach or shotgun, or how's that working?
Yeah, so that's a great question. So basically, I have a tool that is basically almost 500 million algorithmic sequences driven by AI profit acceleration software. So basically, I can look at any sector, any company, any size, anywhere in the world, and it will tell me what that company's gross profit margin will be, and net profit margin will be. And if that company isn't hitting those numbers, it will diagnose areas. Or I have 40 different areas of a business that I can go into, and I'm not going to share the screen, but it's about 40 different areas of a business that I can diagnose and say, if we increase your sales, if we look at your sales, if we look at your downsells, look at your upsells, if we look at your marketing, if we look at your advertising, if we look at your market position, if we looked at your product, we can break down everything. And it's really amazing when I can plug in and say, okay, we want to increase our profits by 3%, but we want to look at upselling or software or marketing efforts or whatever it is. And I can generate an assessment and a report for basically any company. And I will say it's more technology driven CEOs that I talk to that seem to be obviously resonating with what I do because they know that the power is here to help them. And that's where the engagement's coming from. But it can literally generate a report within seconds about, for example, business and professional services and say, hey, your gross profit margin, net profit margin in this industry should be 27%, 6% net profit margin. Are you doing these numbers? More often than not, the company isn't. So that's number one. And then number two, we can look at the 40 different areas or just one or two and say, okay, we can generate probably an additional 35 to, usually it's anywhere from 50 to $200,000 in additional profits, net profits over the next 12 months, based on what we just found in our discovery, in our analysis, in our review, and it will show a report, and I can share it with them, and it's pretty engaging. It's pretty compelling what it found and what it's telling them to do. So it's just I just think the AI powered analysis is using an intelligent tool to uncover insights quickly. And the bottom line is, I'm just here to solve problems. I'm really here to solve problems. And I like helping people. I like working with people. And it's really, to simplify it, it's helping people turn nickels into quarters. That's all I'm doing. Like, you spend a nickel, you get a quarter back, right? You got to spend money to solve your problems and make money. So, and you get these CEOs, and it doesn't matter if they're doing $1 million in top line revenue or 50 million in top line revenue, but you get most, not all, but most get so ingrained in the day to day operations of a business. It's just natural that they don't see some of the problems or profit areas that they could be realizing, right? So almost every business has an area that is not being utilized, and I'm just here to help them find those areas of problems or profits that could be generated for the most part. So that's where I sit.
Great. Did you build that tool yourself?
Yeah, I did. I had a lot of insight from developers and some programmers, and really being able to plug in a lot of knowledge into the model and build a model. And then about actually it's just been short term, about a few months ago is when I was able to really start talking about it and market it and really get it in front of people. And I can, get somebody or have a client on the phone and kind of walk them through the questions that I ask, that are very, very open-ended and just kind of set the tone, very warm, structured, kind of pressure free, but just walking through questions in a typical week, what that looks like, what's been most frustrating or costly about your business, and I think that it's very timely because we had over the last 12 or 18 months, we've had a record amount of bankruptcies in the U.S. So I think a lot of companies are struggling, they're having a hard time with staff, especially with one of the areas in California I know is the cost of labor. So, I know that has to affect profits. And, I ask them, what have you tried? What has worked? What didn't? If things were running exactly how you want a year from now, what would that look like? So just a series of questions. It's more, just learning and discovering and more psychology about finding the problem that they're trying to solve, and hopefully they have the money to solve it and we can find a way to work together. But I think a lot of this came about, if you think about kind of the macroeconomic scale, is that you go back to 2020, and a lot of this has been cited by high level business people and economists, where the government really, they how do I say this, printed a lot of money, I will just say that, in 2020 post COVID, to keep the economy moving, because so many businesses and people were struggling. It was a terrible time for the country. So what happened was, and if you track it, it makes it makes a complete sense where the government basically printed a lot of money, a lot of capital, printed, to sustain businesses, TPP loans, all this stuff to help businesses survive. And it created an opportunity for people to build businesses. It's free money. And even if they had that, then they could go out and borrow at record low interest rates, right? So interest rates were real low. Then you had the government printing a bunch of money, so people went out and I'm going to start a business. Well, we know what happens. So now, fast forward 5 years, now we're at a point where those businesses weren't real businesses and they weren't really based on a real foundational concept, which is why we've had so many bankruptcies over the last 12 to 18 months. But another reason for that is we've had interest rates go completely north, right? It's a hockey stick.
Mm-hmm.
So when you have those confluence of factors, it creates a very, very challenging business environment. So if you put those together, I think what I provide and the problems that I can solve, and talking with the CEO about how to grow their business, how to build their business, scale their business to generate more profits, to scale and to get more customers or clients or marketing or sales, or one of the number of 40 areas I can analyze. I think I'm well positioned there, and I'd love to talk to people about it because I think it's not really a want to. I think people need to really have a deeper dive on their operations. Period. Full stop.
Yep.
So,
Agreed.
yeah.
So I think that answers my next question, which is what gets you most excited about where AI is headed in the next 5 to 10 years? It might even be dichotomous. What are your thoughts on the workforce? Because you touched on that. We see um, you know, AI is definitely going to replace repetitive tasks. But have you seen? Do you think we're seeing enough adoption in the workforce to where that could normalize, and we're not worried about heavy unemployment or things like that? Do you think AI is, that adoption is going to come fast enough for people to save themselves, or what are your thoughts? I think it's impossible to know, but from
Right.
where you see.
Yeah. I mean, a lot of it is speculation, and about there's been people come out and say, oh well, this is going to be the number of people at these levels are at risk, or 3 to 5%, or watch the unemployment rate and everything else. So yeah, there's a lot of talk around it, and I think it's valid. It makes a lot of sense because I think we're already seeing it. I mean, I mentioned my McKinsey article that I posted. The original one was a month ago, and I posted again in a couple groups and LinkedIn, and just went viral. So obviously, I touched a nerve. But what was interesting is as I was going through my comments to respond to all the consulting, the deliverable I wrote, which is the rise of the hybrid consultant, which is what I am, is that McKinsey came out and said they're laying off. I think it was 100,000 people or 80,000 people. So that's McKinsey's already come out and said that. Accenture's already come out and said that. Boston Consulting Group's already said that. It's a huge shakeout. That's just consulting. And I do think, like what I talked about, I think AI is replacing a lot of what consulting used to do, which I think obviously favors me. I never like to see people lose their jobs, but I do think the consulting model was very, very bloated for a very long time. But I do think that if you look at this year, we started the year, I think unemployment was around 3.5. Don't quote me on that. And now at the end of the year, we're headed, I think it's 4.6 or 4.7. So you're seeing massive, massive layoffs in October of this year. I think it was pretty light in November, but I think December is going to be another big month. My fear is, and I think it's real, is I think a lot of and this financial services as well, financial services is probably next, but I do think I wouldn't be surprised and this was talked about at the family office event I was at in Newport Beach about a month ago. AI is here. It's just a matter of how fast companies want to adopt it and really i- implement it in their actual day to day, and how they're looking at jobs and really evaluating those jobs. But I wouldn't be surprised in the next 1 to 3 years that the unemployment rate is around 10%. That's that's what I wouldn't be surprised to see that, just because you have so much of the labor force that can be replaced at a number of different levels. And the issue is that you talk about the 5 different layers of AI, and which is, just to repeat, it's application, deployment, model layer, data layer, infrastructure layer. And that's what we look at Quibits Ventures, which is growing extremely fast. That's what I'm implementing in my business on the AI powered consulting profit acceleration software. Happy to talk to people about that. But I do think that there's so many jobs that can be done much faster, much more efficiently. Where bottom line is they don't have to they eliminate a lot of the risk for a company, right? Healthcare costs by any other benefits. Don't have to worry about that. Companies have to get very, very lean very, very quickly, not only to survive, but to just keep up with earnings, especially if they're a public company. So I think there's a lot of pressure on boards and CEOs to make sure that that is happening. And unfortunately, I think, I know a lot of managers at big tech companies. Those have been very bloated companies, the Googles, the Amazons, the Netflix, the Facebooks. They've been cutting manager staff because that's a big middle part of the cost structure. So unfortunately, yeah, I think that's what's going to happen, because it has to happen for this adoption to really take hold, which it's adopting quite quickly. It's fast. It's happening. That's what I always say. It's happening faster than people realize, and before they realize it, it's going to affect them. So so I'm just trying to be the guy that's in front of everything. That's what I'm trying to do.
Yeah, it's a sobering but realistic
Yeah,
prediction there. And
unfortunately.
people,
So
it's writing's not on the wall. People can make a change. They can make a pivot. I heard
yeah,
it analogized to
right.
getting on a plane or watching it take off. There's choices that can be made to
True.
make sure that you're not on that chopping block. But yeah, it's
Exactly.
definitely coming.
Exactly.
So excellent, Greg. Well, thank you so much. Thank you again. I think this is a good
Yeah.
place to wrap.
Okay.
Quibit's very well positioned to do well into the future. Of course,
Thank you.
no one's got
Thank you
that
very
crystal
much.
ball, but I would bet on you guys for sure.
Thank you
And
so much,
all the
Colin. I
best on
appreciate that.
the AI powered consultancy as well, because I think there's so much value to that as well. And so we'll get some links to your LinkedIn page and your articles that people
Perfect.
can connect with you and see what you've written. And they can
Will
of
do.
course reach out to the Quibits website to learn more. So Craig, thank you very much for your time, sir. I appreciate
Well,
it.
thank you, Colin. This has been great. I appreciate the morning. It's a great way to start Friday morning, and appreciate the time. Look forward to
Cheers.
staying in touch.